There's no doubt that Nvidia stock is one of the best stocks on the market, but it's already more than doubled this year alone. If you don't pick the right entry, you're going to lose money. That is a fact. So in this video, I'll share my updated outlook on Nvidia going into November 2024, my strategy for buying the stock with examples from my portfolio and how I've changed this position, and a trade that I posted in my Discord community, which we've been making money with hand over fist by buying this stock, or bicep over tricep. You guys already know we are making money on Nvidia, so let's get into it. Nvidia has been a standout in the stock market for years, and its current volatility presents an incredible opportunity for option sellers. The higher implied volatility, guys, is already obvious. We already know. Higher implied volatility means higher premiums. Selling options on Nvidia is an absolute goldmine. When we look at the stock like Nvidia with elevated implied volatility, we're talking about higher option premiums, which is just a dream for put sellers. It's also a dream for covered call sellers. It's a dream for wheel strategy. Also a dream for any option seller. So that includes spreads as well. So lots of different option strategies that I want to discuss in this video. This is because the higher implied volatility, the greater the premium you collect when selling options, meaning more income potential in raw returns. So look, I just pulled up Nvidia in my portfolio. I'm up $12,000 on the options. In this portfolio, I don't have stock right now. I have stock in my other portfolio. I'm going to be buying shares in this portfolio today when the market opens. But you can see I've just been selling options. I have 102 put, 125 put, 115 put, 129 put. Selling puts on Nvidia has generated $12,000, and this right here is like the safest, least risky way to literally buy the stock for cheaper than it's trading at in the market and get paid for it. I mean, guys, this is exactly what I'm doing all the time. My strategy doesn't really change because I believe simplicity generates consistent passive income. And that's exactly what I want. Now, look, I've mentioned that I have a Discord community. Now, look, I've mentioned that I've been focusing on one-on-one coaching. I still have a Discord community, but it now comes with my one-on-one coaching. So I have one-on-one coaching and Discord is included in that. I'm focusing on that so I can build deeper relationships and help busy professionals, doctors, lawyers, engineers, nurses. I want to help you guys generate consistent passive income safely. I believe Nvidia is good for everyone. You don't have to have a huge portfolio. If you have 5 figures to invest, selling puts on Nvidia is a cheat code because you get to purchase the stock that's high quality and you get to collect a whole bunch of premium. High quality company, high premium, those two things married equals money. Pretty simple. So count me in, and I would trade Nvidia this way right now, okay? I'm going to show you a few different options. First of all, the stock's at 139. I mean, the stock has had tremendous performance in the past 3 months. In the past year, obviously, the stock has done remarkable things. It's made so many millionaires. I actually have people that work at Nvidia, and they got paid in RSUs, or restricted stock units. They've made crazy, crazy amounts of money. So I would say that if you look at the 1 month return, the momentum is on our side. So what we want is we want optimal entry. We want to get into this company for as cheap as possible, right? So I'm going to be looking at selling some put options. I do have several positions expiring essentially today on 10/18. So Nvidia, you know, the 102, the 125, the 115, I'm just selling out of money. But you can also see I have 129, which is a little bit riskier. I mean, it's higher delta for sure. I wouldn't necessarily call it riskier. So take a look. If I go to sell put, I would sell multiple different expirations right now. Before I show you all the different expirations that I'm going to sell, I always want to explain why I'm doing something, because I want you to understand the deep down reason why I'm making certain trades. So Nvidia is not just another tech stock. It's a leader in AI. It's a leader in machine learning and high performance computing. This stock has massive upward momentum, as you saw, and the premiums for selling puts are higher than most other stocks due to its volatility. Yet this doesn't really make sense because it has higher implied volatility, but it's in a bullish trend, and selling puts is basically it's a bullish strategy. You don't think that the stock is going to fall down. If it does, you end up buying shares. Perfectly fine. You don't mind selling puts getting assigned because you wouldn't mind owning the stock. So it doesn't really matter to you. So when I say Nvidia is a prime target for selling puts, I mean it's ideal for those of us who want to generate consistent passive income without really taking on that much risk. So the risk adjusted return is very good. In fact, it's probably the best on the market. And that's why if you look at the option volumes, like let me show you the option volume right here on selling puts. This is October 18. So let me go to, for example, November 15, which is like less than 30 days from expiration. If I go to something like the 130 strike, the volume, oh my goodness. Wow. The volume is 5,000 volume in one day with an open interest of 25,000. Traders are essentially, like option traders to be specific, are essentially just trading Nvidia. I mean, it seems that way. It seems like it's either Apple or Nvidia, or Apple, Nvidia, Tesla. I mean, that seems like the hugest volume on the market. So the liquidity here is insane. And that just shows you the popularity of Nvidia right now. So it's not for no reason. There's a lot of money to be made. So even spreads, even put credit spreads, which I have been shy from lately because I essentially like more of the backseat approach to investing. I want to open up monthly options, just kind of relax, chill, and get paid like passively without having to like really work for it. And spreads are a little bit higher risk, higher return, but higher risk. So I've kind of shied away from them. And it's also definitely a part of my portfolio, but it's a much smaller part of my portfolio. Like I think spreads should be between 5 or 10% of your portfolio. Beyond 10%, it's kind of just like too much extra unneeded volatility in my opinion. So for example, selling put credit spreads at 15 delta is good right now on Nvidia. So if I had a smaller portfolio, I would, let me see, that's 25 delta, so that's kind of high. 120 strike here has 18 delta. 117 strike here has about a 14 delta. So about 14 delta is good. So if I were to sell this 117 and then I would go to buy and I buy the 112, for example, you will see that the return here is $61. I'm risking like $440. The return here is well, it's well over 7% return. Maybe that's, wait, what am I talking about? That's over a 10% return, because 10% of 400 is 43. So this is well over, this is like 12% return or so in a month. I mean, 12% return. I mean, you tell me. I mean, if you compound that return over a decent period of time, you'll be a millionaire even with the small portfolio. Obviously, this is higher risk, which is why I say like only 10% of your portfolio at most into a position like this. It's higher risk, but it's not, I can't say it's high risk, because 117, I don't think Nvidia will go down to 117 at November 15 expiration. So selling put credit spreads 15 delta is, or around 15 delta, 10 to 15 delta is good now on Nvidia. So you can go for something like, 112, 110, 110, 105 put credit spread for December. The traditional expiration, always traditional expiration, that'll be perfectly fine. So we're going to jump into my portfolio in a moment, and I want to show you some more trades that I would honestly make for different expiration days for Nvidia, because there's an interesting strategy for diversifying and selling puts on different expiration dates. I think diversifying and selling puts on different expiration dates is absolutely a no-brainer. Let's put this into simple terms real quick. I aim for 3 to 4% monthly returns by selling puts, nothing too risky. I mix in spreads when a stock like Nvidia shows strong signs of support, and I use part of my smaller capital to make high income spread bets. I aim for passive income by holding the position until expiration, guys. This is very important. A lot of people say, how do you manage your position? For the most part, I hold until expiration. Now, I will tell you, let me tell you the simple formula though, when I would potentially close out early. So if I've literally, I made 70 or 80% of the value of the option in 1/4 of the time frame, then okay, sure, I will close it out for a profit when it makes sense. I have a calculator for that, by the way, when to close and when to take profit in my Discord community, but that's going to be a little bit long for this video, and that's for my Discord members. I will be honest, it's a pretty simple formula. I'll give you the quick breakdown. You take time, you take how much money is left, and then you see the money that you're making for that given level of time, does it make sense? So it's not necessarily the percentage return that you have. You may make 50% in a week, but it's all about how much money is left. Of that money that's left, how much time is left, and is that return attractive for that given level of time? It's a pretty simple equation, okay? So that is basically when I would take profit from the position. If I made literally, like I said, 70 or 80% in 1/4 of the time, you can see how statistically or basic math would probably tell you it makes logical sense to take profit and reinvest and redeploy that capital, because you want to redeploy capital to yield you a return that is attractive, right? If you made most of your money and there's a lot of time left and there's not that much money left, that's not an attractive return for that level of time. So specifically, I think that Nvidia's dominance in AI and machine learning make it a really good long-term candidate to be an option seller. And it makes premium collection really easy, which is what I really like about Nvidia. High volatility equals higher returns, which is fascinating because most people are afraid of volatility. Most people, they yell and scream and get nervous about volatility. You can't blame them. As an option beginner, as a trading beginner, yes. But as you get more experience, volatility becomes your friend. So selling puts on Nvidia lets you profit from its explosive growth while still playing it safe with strong downside protection. These are out of the money options that I'm showing you guys. I target 15 delta put credit spreads on Nvidia because it balances risk and reward, letting you capture income efficiently, which you can mix in with your other strategies like selling puts. But of course, it's not necessary. You don't have to do the put credit spread strategy. So I'm going to go into Nvidia, and I just want to say, I'm going to show you some more trades. I'm going to go into trade Nvidia options. Actually, I'm going to go back here and sell puts. I would say you can go longer term. Easy money to go long term. In fact, something that Warren Buffett did was back in 2008 during the financial crisis, when all the banks were kind of going like bankrupt, right? It's kind of funny. The banks were getting, they were going bankrupt, and they had too many bad loans that they gave out for mortgages. So for example, he went to Bank of America, which was trading at, I don't know, let's say it was $10 per share, and they were scared of going bankrupt. He said, listen, Bank of America wanted to hedge itself, so they needed to buy puts. It's kind of interesting. It's really interesting. They wanted to buy puts, right? Because puts help you hedge a portfolio, right? But you have to pay for that. Warren Buffett said, listen, I will sell you the put. Warren Buffett is a put seller. Okay. This is not known to public, guys. This is stuff that I've learned during my education, during my time working in the field. All right. Warren Buffett said at $5 per share, I'm gonna, at the strike price, I'm gonna sell some puts to you. So you can buy puts from me, and if you go bankrupt, I guarantee you, capital G, I will buy Bank of America for $5. Bank of America said sure, and they did that deal. I think it was 4 or 5 years out. It was obviously a private deal, so it wasn't like you, as an option seller, like you can't just do 5-year options. They're not really available. But he made a deal with Bank of America. Hey, I'm gonna buy it. I'll buy your shares for $5, and that's what the put option is. Bank of America bought it. Warren Buffett sold it, and he gave security to Bank of America. And guess what happened after 4 years? They didn't go bankrupt. So he got paid a bunch of money up front, right? Nothing happened. So he never had to pay out the money. That's beautiful. That's like insurance. So if you want to be an insurance company or like a mini insurance company, you sell puts on high quality companies like Nvidia. And that's exactly how I figured out this strategy. I put 2 and 2 together. I thought about, well, my mentor, I can't call him mentor, but I read all of his books. Someone I look up to, Warren Buffett, is a put seller. He's literally a put seller. That's how he made a lot of money. And Geico, as an insurance company, which is how Warren Buffett made a lot of his money, collects a bunch of premium from, auto insurance, home insurance, and they hope to not pay out majority of that, right? They hope to keep a majority. So same thing here. When you sell puts, your goal is to keep a majority of the income that you essentially bring in. Sometimes you'll get assigned, but the good news is in an insurance case, when someone gets into an accident, the insurance company pays out the expenses of the damages, right? But here you're making money, you're collecting income, you're like a business. You have like a cash flow business. But worse that happens is you get assigned Nvidia. So you get assigned Nvidia at, let me show you. Let me go to March 21st here. All right. Look, this is so easy. You just go to March 21st. I'm just going to scroll down, and 110 looks good to me. Delta's 0.2. Ask yourself, do you want Nvidia at $110? Do I want Nvidia at 110? The answer is yes. I would love Nvidia at 110. Wait a sec. I get paid $685 and I get to buy it? Yes. Both. It's like, count me in. So right here, if I were to sell this, right, essentially I'm saying I will buy Nvidia at 110. You get paid for it, and that's essentially your obligation. Now, I would hold this position until expiration. There is no need to adjust it or anything like that. I will have a course soon coming out on the wheel strategy, and during that course, I will explain a little bit more about adjusting and managing. So make sure you're subscribed. That video is coming out soon. It'll take some time to edit because I want it to be beautiful for you guys, and for it to be very very high quality. But look, I think the long story short is you don't really need to manage a sell put position, because your hypothesis of getting into that position when you enter is you like the stock. So with Nvidia, which I think Nvidia is heading to $800 per share in the next 12 to 36 months, right? I'm not a genie. I can't say 15 months. 12 to 36 months, I think it's possible. So I said this in my last video. In the time frame, again, I don't know. But $800 per share, we're headed there, okay, on a long-term trajectory. Now, I don't know if the trajectory is going to be like this, but I know the point is here, right? So the point is here. Our starting point is here, right? I don't know how it's going to go. It's going to go like that, boom, right? It could go like this. I don't know, right? But I think we're going to be in a tight channel. That's the Bollinger Band, by the way, what I teach, my technical indicator, my #1 technical indicator that I've been teaching for years, right? I have a statistics degree. Bollinger Band. I've been one of the first guys to cover Bollinger Band. I can't speak more highly about the Bollinger Band. I personally use it in all of my decisions. It tells me exactly the range where a stock is. So look, the Bollinger Band will be tight, something, within reason, and we're going to go like this for Nvidia. We're going to go up, but there's going to be normal volatility along the way, right? So selling options on it is an easy way to leverage its upward momentum for consistent gains, along with just honestly holding the stock. Sometimes holding stock is also easy money. You don't always have to sell options. I know my channel is about options, but sometimes you can just hold stock and get really good returns without even having to play any options at all. So with that being said, I want to just wrap up here with a little bit more expirations that I would be picking for Nvidia. So one of the expirations that I would look at is just March 21st, but you can also go for February 21st, right? The traditional Friday of expiration. I don't know why it's a traditional, by the way. You can Google it, but options expire the third Friday of the month, which is why essentially in my Discord, I'm only making monthly trades. I keep it simple. I make monthly trades, people copy, paste, get results, celebrate, and we have our live coaching sessions Mondays and Wednesdays for 45 minutes to an hour. I answer questions. So that is the first link in the description. Uncle Henry there, coaching link. But yeah, I think what I would do, I'm gonna try to find an angle here. I want to show my bicep over the tricep because I'm buying Nvidia bicep over tricep, seriously. So February would be a good expiration. I would say February, you can go more aggressive, by the way. If you go for a higher delta, this is not incorrect. It just means that you have a higher chance of being assigned. So being assigned isn't really a bad thing. In fact, Goldman Sachs research that I've gone through, essentially higher delta is actually higher return, but at a lot higher volatility, which is why I say my sweet spot delta is 30. But 40 isn't incorrect. 20 isn't incorrect. Incorrect is when you go 10 delta, then that's too low, right? If you're selling puts on 10 delta, like, yeah, you're going to make money, but it's just, you're probably going to make less money than the S&P 500 at that point. So 41 delta, nothing wrong with that. Here, the return is 1,500. So if you were to sell this, by the way, your break even on Nvidia is 119. You get essentially a $20 discount to the current stock price. So you get to buy the stock for a lot cheaper than what it's trading at in the market. That's really attractive. If you're really lazy, let's say you're a busy doctor, you don't have any time, you can actually just sell a put option on Nvidia. I would go 140, okay? 140, just at the money, slightly above the money. And here you'll collect $25 or $2,500. You get to absolutely do nothing until September 19th. And then maybe you'll get assigned the stock, probably not, which is why I would probably run this strategy, even using a little bit of margin because this is so safe. But margin's a little bit off topics here on YouTube because it can be very risky. So I'm just gonna say that I use margin, but I only teach it on my one-on-ones because it can be risky. I would just simply say diversify and sell different expirations. This is unique advice, not a financial advisor, but this is unique tips. Sell different expiration dates just like I am. I mean, if I look at my position, I'm selling different expiration dates. October, November. I can go longer term as well, but obviously as a coach, I want to make a little bit more trades for my community so we get faster profits and we have more things to learn from. But if I was just doing this and I wasn't up on YouTube and I wasn't trying to help people and coach them, I would just sell puts maybe every quarter, every 6 months, every 9 months, every once a year. I would literally do this. I would do this a lot less and I would make it even more passive. So just depending on how passive you want it to be, you can sell for different expiration days. So I'll wrap it there. I'll keep it short and sweet. And I hope that you guys had a lot of value out of this. Make sure that you subscribe and I'll have more video updates for you guys soon. And if you want to learn more about option trading, I have a fantastic video that you should check out right here if you want to level up your game and create passive, consistent income.